Ladies and gentlemen of the crypto space, we're live at 11:29 on Wednesday, October 28th. It's the end of the month. Time flies, and we are in the craziest times I've ever seen. I'm pretty sure craziest times that most people have ever seen. Today's topic is Bitcoin supply disruption, pristine collateral, mega moon. These are all the things that I've been talking about, and frankly, a lot of things that I've known, but Raul talks about them really, really well, much better than I could ever talk about the notion of pristine collateral, albeit this is something that's known particularly because of its limited supply and demand exceeding supply and supply disruption. You're not going to be able to get your hands on this. And if you're going to get your hands on Bitcoin and other assets that are in very restricted and limited supply, we're going to pay a fortune for it, which is essentially why Pokemon's through the roof, MTG, Magic the Gathering's through the roof, and their assets in very, very limited supply. Today's episode, along with all episodes, is sponsored by Change Angel, non-custodial swap exchange for social goods. Stop depositing on exchanges. Deposits, withdrawals, what a ridiculous concept. Send asset, get asset, you're done. You are not trading. Unless you are a trader, you want your limit orders, your stop losses. Yeah, you trading? No, you're not trading. Stop trading and start swapping. Who's in the house today? RR. What's up, Barry? Digibite. Hi, all. Beautiful Bitcoin bounce of the 200 EMA looking at the hourly chart. That's almost better than Shaq. So let's take a peek. Let's pop it over to the main screen and see what's going on. Let's dig in. So the stock market's getting bruised up massive this morning. Let this reload for a sec. What are we, 800 points, give or take? Got about 863. So of course this is going to take everything and everything with it. It's the system's imploding. So there's a lot of questions to ask. What do you own, and how much do you own, and portfolio balance and position sizing and risk analysis and all these fancy things. And what do I know? What do I talk about? That I have strong hands and I stick to my convictions. I have very limited. I have exposure to equities, but they are a small portion of my portfolio. Small portion of it, and that means my downside is limited. And I've done this very strategically and intentionally because I have a bias against fiat and the traditional financial system in general, which includes obviously predominantly equities. Now, um, you know, there's just no fundamentals. How can you invest in something without fundamentals? It's absolutely ridiculous. And I believe, and as I talk about the crypto assets, there's much more meaningful fundamentals about crypto assets. You literally have these assets that respond to monetary policy properties, and that's basically what the DeFi movement has been, especially towards the conclusion, August, September, and October, especially like October, end of September, October, with the garbage forks. They're really struggling to find legs to assets, and that's really the only play is monetary policy experimentation and ways to incentivize supply shock. And some of them were effective. The vast majority were rug pulls, so to speak, and just huge amount of money was lost. And just it's just risk across the board. It's not worth it. It's not worth it. Risk off, boys and girls. Risk off. That's what I've been saying. Stelios in the house, always a pleasure. Sam, my man, yes. Let's pop it over to Bitcoin. So Bitcoin was, bam, 13,885. This green line is not a local resistance. This upper green line is a massive multi-year resistance. Check this out. Let's take a peek. Let's pop it out to the daily. So this upper green line is the resistance from June 27th of 2019. Guys, this is not a local resistance. This is the most incredible thing yesterday. Literally, it hit that resistance. Psychologically, it's meaningful, and we do look like on the 1 hour. Let's swap to the 4 hour. So on the 4 hour, we're below the green line, and the green line was the other resistance was here. Was the July 11th, 2019 resistance. So if I really would like to see the daily close above the green line. Um, at least the daily, the 4 hour, I mean, look at that candle. That thing wicked down. I mean, if the 4 hour candle closes above the green line, that's sweet. That's sweet. And then we have a resistance support, and we have a pinch. I want to see some sort of trend formation, especially as the equities market stops its implosion. It's bleeding. This is the kind of day that Trump's on the line with like Minucci Bucci and Powell saying, "What are you doing? Print some money." Because that's all the government nowadays does, whether you're Republicans or Democrats. They're trying to print money. Print, 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 print. Humanitarian crisis aside, no doubt. Stelios, Sam says, can't wait to buy another dark node. You with me, man? Yeah. So let's take a peek at Ren. So I only have a couple of charts up right now. Everything else I don't really pay much attention to. Curve, cause these are my biggest yield producers. Ren is a heck of a yield producer. Curve, Curve has recently exploded as a yield source. The volume because of the Harvest Finance hack, and I look forward to getting my VE Curve administration fee distribution, so I get a good portion of this 1,838,000. I'm not getting $500,000, but I could easily see like $2,000 to $4,000 out of this. That'd be nice. But my yearly earnings would be 27 if things keep up. I expect them to. I expect dilution as Curve gets locked for VE Curve, but I still own a good portion of VE Curve, proportionally speaking, and that's what's most pertinent. 234%. I mean, I remember seeing this in the 140s, but yeah, just for myself, my opinion is completely unfazed. In fact, I'm probably more bullish than ever for Curve, especially with was a Yearn and other the DeFi automation protocols are probably going to further encourage supply locking, which is basically the two parts of the half of what drives appreciative price action. You have supply disruption and demand increases. So if you have assets being locked, you have supply disruption, and if you have assets being locked for yield, there's an increase in demand. So literally, Yearn is one of the biggest drivers of asset price appreciation possibly imaginable. It literally triggers demand shock and supply shock, and there's more than one protocol that has that kind of effect. So this is Curve. Curve ran 100% from here to here. That's 100% rip to the upside. That just doesn't happen, man. And this is really good. This was an old formation, some of the old drawings, and I really like these top and bottom orange lines. It was just fascinating that it hit resistance. I mean, look at this. The price action over here in October 27th and this previous resistance on October 12th, 12/27, it was 15-day difference, but this price action from the 12th held resistance on the 27th, 28th, end of 27, whatever. Point being, that's fascinating how these little lines in the chart are so meaningful. So it's nice to have the old drawings because they are relevant today, tomorrow, and in the future. Even more so as you look. Oh, look at that! Look at this. You see this, guys? Just what I was talking about. Ooh, woo! Look at this beauty. Let's get rid of this black stuff. There we go. Boom. Oh my God! Look at that. 4 hour above the bottom green. Oh, that is good to see, guys. Let's pop into the 30 to see some more subtleties. Look at that. Look at that. 13,213. Man, this was a heck of a dip. 2,900? 12,900? Incredible. What about a rip and a dip to the downside, boys and girls? Woo, woo! So Sam mentioned Ren, and I got distracted as always. So so Ren's on the slide. There's nothing bullish whatsoever about this chart. So I expect, at worst case, at best case, there's something in here in this price action. Let's take a look at the 4 hour, see if there's a 200 EMA or the daily. Here, look. So here you go. I don't think it's going to get to that bottom red line. I think we'll bounce off the 200 EMA. I mean, there's some seriously bearish price action, but if it bounces off the 200 EMA, I mean, this is still a triangular formation, So, we see something like this. It's black. As long as it's above the 200 EMA, and then we get a breakout, and then a retest, and a high. Oh my God, these are the most pronounced lines. We would not see lines like this. So don't take my lines as an example of what's going to happen. But the point is, I look for a breakout and a retest of previous resistance, flip support. But I would expect this 200 EMA to hold. This is the daily 200 EMA. There's no indication that we're that bearish, and that's a big reason why I've kind of shied away from like Kyber. Let's take a look at that because it was just below the 200 EMA for the longest. I may look at. Oh goodness. Where's the where's my guppies indicators? Uh, Super guppy. Is that a new one? Okay, that'll do. So that's the default coloration. Where's the 200 EMA? Bear with me, guys. Bear with me. 200. I don't like this. There we go. White, fat. Where's the 200 EMA drawing? Oh, that's unfortunate. Oh, that's unfortunate. I can't see it. All right. So the point being, Kyber, look how bearish this is. Albeit, let's draw a horizontal line real quick. So, hmm, maybe, maybe. You guys know what I talk about Kyber. I talk about it as an incentivized supply disruption. It's a deflationary asset. It has all the monetary properties you want in an asset. But here's one thing it doesn't have. Finance. Dex tracker. Let's go over here. Check it out. So Kyber does not have the volume. So monthly volume. Let's filter out Uniswap because that's just ridiculous. So Kyber is green. So Kyber is this little sliver of green up here with $164 million for the month. And obviously, if you look at Uniswap, Uniswap is just dominant over the entire space. But you filter out Uniswap, Curve is obviously extremely dominant. So I call it a duopoly. And I believe 0x has that's like the Green Party, Right to Life Party, or some sort of one of those tertiary political parties. But you have two dominant players that are overwhelmingly, obviously dominant. There's no way to say Curve and Uniswap are not the dominant players in the space. And that's what's so meaningful. When we're talking about like Curve getting completely destroyed, its price action, this move to the upside, and we're talking about the Dow and the yield that comes from the governance fees, the administration fee, 0.02% of all transactions. This is so meaningful. If this goes to $1 billion a day, $5 billion a day, $10 billion a day, do you have any idea what owning 0.01% of the E curve is going to produce thousands of dollars on a daily basis in returns? And that's if they keep the fees at 0.04, 0.05. I mean, Uniswap's at 0.3%, guys. And I mean, Curve is just the FX, the Forex of the crypto space. Equivalently valued assets that facilitate liquidity, where you have a different denomination, like you have Tether, Ethereum, USDC, Ethereum, DAI, Ethereum on Uniswap, and you go to 1inch, it's going to route. You could trade between any of them, and it'll route the transaction automatically through Curve to facilitate the cheapest transaction, depending on current valuations of DAI, the subtle differences between the valuations of DAI, USDC, and USDT. Yeah, USDT. I don't know about that USDT. Too much risk, boys and girls. Stelio says, we pumped too early, in my opinion. It's still October with all the FUD. We need a big pullback before the big pump to the stars after the election. Well, my opinion is that we pumped. We pumped. And man, it hit resistance. And the only reason this is breaking down is because of the equities market imploding today. what drives me nuts about these headlines day in, day out. Dow is up 800 points because of fear of the coronavirus. Is Dow is down 800 points because of fear of the coronavirus. And then tomorrow it'll be Dow is up 1,000 points because coronavirus optimism. They literally, for the last however long I can remember, every end of the headline is because of recovery, because of coronavirus. It's the stupidest thing I've ever seen. No, the Dow sinks 800 points because there's ridiculous systemic instability, and the entire system is propped up like a house of cards because of the fiscal stimulus that was passed 1 billion years ago at this point and is running out of effectiveness. And there's reasons that overwhelm the capacity of the Fed to buy everything. So even if the Fed buys every single bond they could get their hands on, the system is still going to push down if there's enough reason for it to push down. And was it 80,000 infections a day? When it's 160, when it's 200,000 infections a day in late November, December, and January, yeah, that'll change. That's going to change a lot because it's only going up, and there is no way any of these states are going to shut down. The financial system can't allow it to shut down. We'll have a financial calamity, a humanitarian crisis because of that. So the solution cannot be worse than the cure. I agree with Trump in that regard. But the problem is, the economy is going to tank by itself merely because of FUD. But the FUD is warranted. Fear, uncertainty, and doubt. There is legitimate fear, legitimate uncertainty, and legitimate doubt because the coronavirus, people say that doesn't kill 99.9%. Sure, but if 0.1% of the population of the United States dies, that's not good. I don't want my grandma to pass. Come on, guys. Humanitarian crisis. People literally say, they're like, oh, the death count is down. The death count is down? A person, a family member, a friend died, and that's how you refer to them, is the death count is down. Less people died rather than more. A human being, maybe it changes if grandma died, and then it's a different story, and then it's pretty sad and pretty unfortunate and pretty shitty. Yeah, so it's not as cut and dry as people think. There are emotions involved in this. Can't just let grandma die and be, grandma goes to church and she gets the Rona. This could be a tragedy. So it's quite complicated and not simple. Anyway, Barry says my bank account is down because of the coronavirus. Yeah, so, that's really what I'm thinking about. People see down days like this in the market, whether it's the equities market or whether it's Bitcoin, which is actually popping up nice above this green line as support. Woo! That is gorgeous to see support on that green line. But what people fail to remember is that when you see down days like this and you think dollars in a bank account are stable, that's the fallacy. And it's not a lie, but it's an illusion. And it's a misleading reality that $10 in a bank account is $10 in a bank account tomorrow, is $10 in a bank account next year. So it's a problem, but it's also, I think it's not short-sightedness by the general public of people with bank accounts. And it's not necessarily intentionally what they created, but it is reality. That number in your bank account, as I've said countless times, is not a fixed value. You don't give a shit how many dollars you have. Nobody cares how many dollars they have. So the lie, the charade, is all people care about is purchasing power. And nobody at the bank tells you how much purchasing power you have. They tell you how many dollars you have. So, it's, you guys see my point? My point is you got to peer through the bullshit. And the bullshit is that you don't give a crap about how many dollars you have. What you care about is what you can buy with those dollars. So, if you go to the supermarket and it's $75 this year, and then next year that same exact quantity of stuff, cereal, vegetables, whatever the hell you buy at the supermarket, was $125. That's going to change everything about next year's lifestyle. Your lifestyle, your life will change next year if that cost of those goods increases as such. So the point being, you don't care. You do not care how many dollars you have. Now, interesting. My wife and I argue often about my. She likes to take dollars out for my daughters, and I'm like, you realize in 10 years' time, every dollar that you take out every month is worthless. Because in 10 years' time, you're talking 10% according to Chapwood Index, and it's probably going to go up. So about 10% per year depreciation, inflation, so to speak. In 10 years' time, it's going to be worth like 95% less value. So storing value in those dollars is the worst choice, worst course of action possible. And we get into that conflict every now and then, but that is a true statement, and that is undeniable. Absolutely undeniable what the Chapwood Index shows us. Stelio says, are those two CME gaps going to get filled this year? Ooh, yeah, I don't worry about the CME gaps on Bitcoin. I I worry about just not owning fiat, and that's just because of this. It is the most distasteful, toxic asset I can think of. Now, interestingly enough, the story is very different in other countries, because in other countries, the dollar is the best fiat, is the better fiat of all global fiats, of all global currencies. So that's awkward, and this is where Brent Johnson and Raul still are don't discount or don't completely dismiss the possibility of a deflationary event. And I can't argue with that logic. It's sound and reasonable that if all countries around the world are experiencing the crises as such, then the prevailing trend is to take their fiat and buy dollars with it, both at the individual level, the corporate level, as well as the sovereign country level. And that would put enormous price appreciative pressure relatively, in forex land on the dollar versus other fiat. And that's not something that the United States wants. And this is where fiscal comes in, and the Fed and the swap lines, and they really need to crush the dollar. So how do you crush the dollar? And this is really where like the MMT and the digital currencies come in, because you can only disseminate dollars so much in the swap lines, and that's why it was limited, because they were sending dollars to other central banks, and the central banks needed to distribute the banks, and then the banks needed to distribute the corporations, and that's the most ridiculous sequence of events that we're resorting to in 2020. It's almost pathetic. So that's the whole point of the digital currencies. That they could bypass the banks, and the banks are a problem. So that's interesting reality. That the banks are a problem for the central banks. Chase, HSBC. Banks. They're a problem because they're not in the best interest of the economy. The banks are in the best interest of the banks. So the banks aren't lending right now. M2 velocity is collapsing, or has collapsed, and is still further collapsing because the banks aren't lending, because there's too much risk in lending. They don't trust that someone's going to pay them back. How about them apples? So what the federal government is probably going to have to do, they're probably fast tracking digital dollars, either Fed accounts and or something. Point being, so they could disseminate dollars directly to people, and they'll probably have to put like expiration times on the dollars to force people to spend it, and that's the only way they're going to be able to get velocity up. Um, and that's just real, because you need to the only way, if M2 velocity M2 money supply is through the roof and the velocity is collapsing, the only way to prevent a ridiculous potential inflation event for goods and services as the general public sees them is to get GDP up, is to get spending up, is to get the M2 velocity off the flat line. It's flatlining. So they got to force spending. Fascinating. It is. This is what I'm almost 100% certain we're going to be able to say over the next couple of years. We're going to see some fascinating shit, boys and girls. It's going to be some serious stuff. It's not going to be simple. It's not going to be some baby stuff, little things. We're going to see some serious changes in the financial policy and the tools and the services and the systems that we use on a daily basis. Everything is changing, boys and girls. The digital age is really here. Man, coming from a guy who grew up when the VCR came out, they're about to get rid of dollars. Paper is going to go bye-bye. Because if you have paper, you could bypass the system. And you could hoard dollars. And that means the government can't control the value. So that's what the government's going to need with MMT, and that's where I said the forced spending. If everyone is kind of forced or highly encouraged to keep their money in their Fed account, the government could put an expiration time and force them to spend it by saying, if you don't spend it, you're going to lose it. And the government could force people to take their money out of bank accounts by having negative interest rates. You know, if you have a negative 3, 4%, 5% on your bank account, if you combine that with the Chapman Index inflation rate and you're losing 15, 16, 20% of your value on your bank account per year, are you really going to keep your money in a bank account? Oh, what a ridiculous reality we're really coming into in many regards. That we're going to be in complete control, or the central banks are going to be in complete control of us, our spending habits, and they're going to know everything. They're going to track everything. Sam says, yeah, right. Agreeing with Stelios. I agree. Tricky to join the stream on wintertime, but good evening nonetheless. Stops in the house, my man. Yeah, I know. I'm sorry. This is literally the only time of day I have. My day is packed. This is 11:30 a.m. Eastern Standard Time, and it doesn't stop after this. I get off the call, and it's just phone call, meeting. Dave says, my God, the fiscal situation is so sad. Well, yeah. Well, they destroyed the financial system once they went on, and basically they can't get off zero. And it really all comes down to interest rates. And it really all started after they took the country off the gold standard. And it's much more complicated than I could possibly begin to explain. There's much more smarter persons than I that could elaborate on the sequence of events that caused us to get to where we are. But suffice it to say, it's basically just greed and emotions and desire for consumption, and those are the types of things that led to the choices and decisions that were made that got us to where we are. They wanted to inflate the system more than the gold allowed because that's just why. That's it. They wanted to just blow it up, and they did. And the growth was enormous for 50 years. And now it's completely unsustainable. And the valuations are through the roof. And it's a bubble of all bubbles. We are currently in the biggest bubble in the history of bubbles. Bubble. At least in the equities market. I don't know how this compares to like the tulip mania and people call Bitcoin a bubble and who knows what's true and not. Everyone has their own damn opinion. This is the most ridiculous thing. And this is why I fall back on some fundamental ideology. I don't want anything to do with fiat. That's it. I'm done. I'm done with this bullshit. I'm done with this opinion because I could settle. You got the gold bugs that are like, oh, you got to own gold. And you got the gold bugs love their gold miners, and all I know is you don't see anyone saying, oh, I got to own dollars. We've got to accumulate dollars. So I think that is probably the safest way to describe my position. Everything but dollars. I want to own anything but a stupid U.S. dollar. Because they destroyed what it is. They destroyed its meaning, its value, virtue. There's no virtue to a dollar. It's perverted. There's something that's toxic and disgusting and pathetic about it. It's the last thing I ever want to accumulate. Bottom line, baby. Stelio says, was the average APY from VE curve always this high? No, it was not. It was much lower, but as the harvest event unfolded and Yearn Finance came out with some stuff, things have changed. And can you imagine what happens in the next 5 to 10 years? So can you imagine a $20 trillion crypto market, a $20 trillion Bitcoin market, and let's say a $5 trillion everything else market, a $25 trillion crypto market? My God. Or whatever. Curve becomes a part of the global financial hub because it was the first. And just like Bitcoin, when something is the first, it may has first out of the gate momentum. It's entrenched. That's meaningful. It being in a duopoly with Uniswap is meaningful. Nothing's going to come along in the short term and disrupt it because Curve is already out ahead, doing what it does, and that has psychological momentum. People go to it for the functionality it currently has. It is very rare that things change, duopolies change in short order. Very, very rare. Luke says Bitcoin hitting 10K by Friday. Well, being that it has this green line of support of 13,234, this is a heck of a green line of support. This is a non-trivial green line that was, in fact, if this holds above this green, this holding above this green line of support is incredible. If you think about it, because this was resistance on July 10th, 2019. So a resistance flips support? That's a big deal. This is a big deal. If we head down and it bounces off of here, if it does something like this, and I'm going to jump off the stream in a second. If it does this, oh, that's so bullish. So you got a multi-year resistance flip support, a higher high and a higher low. So that's a confirmation. This would be so bullish if we see this, guys. You think, you see bearish price action, and you're like, it's got to be bearish. No, this. If this happened right here, this would be one of the most bullish indicators I could possibly think of bearish price action. Bearish price action can be extremely bullish when particularly proving a resistance flipped support. So that's the bottom line for a Wednesday, 12:02 p.m. Thank you, everyone, for joining. Smack those thumbs up buttons. Tell everyone to subscribe. Best 30 minutes of my day. And guess what? We'll do it all over again tomorrow. I wish you all a wonderful day. See you tomorrow. Peace.